So I'm just gonna kick off. First question, the obvious one, can I get a mortgage if I'm new to Canada?
So before, getting into this, we need to see if they can actually purchase first. So as you guys know, there's foreign buyers ban. Foreign buyers ban is a law, right? It stops people from other countries from buying a home in Canada. It helps keep houses more affordable for Canadians. There's some exceptions it exist, like students and temporary workers. And the government of Canada extended the law for another 2 years. I think it's set to end in December 31st, 2024. So this law applies to all residential properties that's building with 3 dwelling units. I think larger buildings with 4 or more dwellings are not part of the act. And the properties in census metropolitan area and census agglomeration. It's pretty much all larger cities surrounding small towns of population at least 10K is included in the ban. So I think it's like pretty much everywhere in Canada where people are. So as a mortgage professional, we do need to memorize the exceptions because those are the people that are going to be exempted from this law, and that would be our potential clients. So there are temporary residents studying in Canada, and there are more requirements there. So you should actually go into the Canadian government website and check this out. We'll talk about this later in more details, but I do want to talk about students specifically for those with post-graduation work permits. Those people will be able to get mortgage. And temporary residents with work permit, yes, and temporary resident spouse of a Canadian and permanent resident and refugee status. So in answering the question, can I get a mortgage if I'm new to Canada? It can really depend on the residency status of the clients, right? And as purchasing requirement and the mortgage requirement are not the same. Most temporary residents with work permit and spouse of temporary residents, PR, Canadian citizens with an open work permit, and clients with protected person status granted will most likely qualify for mortgage if they meet the lender's requirement. But let's say an international undergrad student who's purchasing a home, and the client may be able to purchase a property in Canada, but by meeting the specific criteria, but there isn't going to be a lender who's going to lend the mortgage to the client who's restricted to work a certain number of hours per week. But a student who's received the post-graduation work permit can be a different story. So post-graduation work permit is granted for students graduated from a program that's longer than 8 months and longer than 2 years. So, and that permit can be valid up to 3 years. And if the client he's a student with a PGWP, treat it like a work permit holders with a mortgage application. Another thing that I wanted to mention to everybody is that we have non-resident speculation tax in Ontario and BC. And I think it's crucial for mortgage professionals to remind the clients this information because when I have the initial call with my clients, I almost like 90% of the time, they don't know about this tax. And since this tax is high, so high, they give up purchasing a property. Even if the client can purchase and get a mortgage, NRST tax is another obstacle to overcome. It's like 25% in Ontario. Of course, I mean, what NRST in Ontario is 25%, and BC from like what I believe is 20%. So in Ontario side, buying with a foreign national will trigger this regardless of the ownership percentage. So in BC, from what I heard, from what I checked, it's 70% of the ownership of a foreign entity. So, and it's actually specific areas in BC that actually that tax is applied to. But right now, in Ontario side, there's currently no way to defer the tax. There's no around to it. There's absolutely zero. So because I think I saw a question on newbies group, someone asked that question, where if they could defer the tax. But there is exception to that too. So if it's a nominee status, the client is nominee status. Nominee is I don't know if you guys know, but provincial nominee status is referred to. It's like another pathway for a Canadian province or like territory nomination to for individual for permanent residence residency applications. Like it's a program, I think, and it's like it depends on their skills and work experience and ability to contribute in local economy. Like I think it's harder to get that status. But there is a status called nominee status, so you better check that if your work permit client had ask them if they're nominee status. And PR status is obviously permanent residence, so it's not applied. Protected person is a refugee status. Spouse of a nominee or PR protected person is also exempted. But there is a way to get this refunded in Ontario side. So within the 4 years from the date of purchase, if they become a PR status, they can get this refunded. And I think for BC, they need to be a PR within 1 year, so it's more restricted. So again, even if they can purchase a property, getting a mortgage can be a different story. And typically, new to Canada programs through a lender and a B lenders are meant for PR status, work permit holders. And Canadian citizens return to Canada from working overseas within 5 years are also considered new to Canada. Yeah.
Oh, okay. So sorry, if they work overseas for 5 years and then come back, even if they're Canadian citizen.
They're considered new to Canada. Yeah.
Interesting. I didn't know that. Okay. Question here. Nominees don't need to pay the taxes? No. Okay, good to know. What do you find the majority of your clientele? Is it kind of like the graduating people who come in off of student visa or just a mix?
Mine's more of a because of the NRC, they can't purchase. It's
Right.
like huge for them to get that amount in hand. So mine are more permanent residents. They're
Right.
more they're more permanent residents and work permit holders. Yeah, but like they're not really they want to wait. It's unless they're like super rich. Yeah.
Okay. Um, Nominee status, just for any of those kind of asking, it's provincial nominee status refers to Canadian immigration pathway, where a Canadian province or territory nominates an individual for permanent residence based on their skills, work experience, and ability to contribute to the local economy. Correct?
It's not really like I think from what I hear, it's you guys should check it, but from what I hear, nominee in order for someone to be a nominee status is not easy at all.
Not
There
easy.
there are only certain spots available per year for that to be a
Right.
nominee.
Right. Yeah, it sounds like it's kind of hard to get. And they're exempted from this tax. And rebates are only available if they become a PR status within the 4 years from the date of purchase, right? And that's Ontario, but the
That's Ontario.
BC is only 1 year within the register date. Okay, interesting. So differences there. All right, next question. If you guys have any questions too, feel free to speak up. What are the requirements for a newcomer to qualify for a mortgage? So what about like credit? I know we had a question in the chat about Equifax, if it's like available in other countries. I'm not really sure. I don't know if anyone else knows on the line besides the countries that that person listed. Can a newcomer without a Canadian credit history get a mortgage?
So most like lender requirements for new to Canada, especially for mostly for new to Canada to be considered as a new to Canada is some programs offered by financial institute like TD Bank, Scotia Bank for conventional new to Canada requirement. They can be similar but different. But most mono lines and TD will require less than 5 years in Canada from the lending date. So how do you know the lending date? So I usually look at the credit bureau file created date, and that's usually right. And then Scotia is 5 years within 5 years from the PR since date. So I tend to use Scotia a lot. for PR status. And new to Canada program typically require minimum 3-month income, full-time employment. Relocation within the same company could be a different story. They don't have to wait. But yeah, down payment is a minimum of 5% required. And there was a recent change in the down payment requirement where it used to be 5% of own sources, but now actually I think it was Canada Guarantee. They're saying it can be gifted funds, even the 5%. Yeah.
Oh, okay.
And then no borrow source of funds are permitted. And credit bureau insure requirement is if the client has, typically 2 years of history in Canada, which is great. It works out to be better. But if not, there's alternate form of credit. So international credit bureau, if the country actually has a credit bureau, you can pull that, or you can ask the client to, pull it for you. But just make sure that you don't pull it, there's also expired date too, just like Canadian, just like our domestic credit bureau here. So just make sure there's 30 days, and then utility bills of 12 months. Then lower reference letter can be, it can be also work as a credit bureau, instead of having that credit bureau. And bank statements of 12 months or 6 months to 12 months, depending on insured. And credit card statements would work too. They kind of want to see how they, manage the money. Yeah. And then the requirement on credit bureau for conventional new to Canada, they usually say a minimum of 680, but then it's also, I've always had a workaround to it. So, like I mentioned above, like I talked about all this alternative credit form of credit. So you could use that too. And same income verification applies for new to Canada. Yeah, typically. But there are conventional new to Canada programs that I want to talk about. There are Scotia and TD Bank through our channel. Jill calls that program Wild Wild West, and because it can be seen that way because it's just crazy. Scotia has a unique new to Canada program. It's called Start Right Equity Offset, and there are actually 2 different programs under that. So there's one equity offset program, and there's another one net worth program. So, like I said, less than 5 years in Canada, from the PR sin stage, and Canadians who returned from working overseas less than 5 years, same thing. So income, you can use a projected income for that 2 program, equity offset and net worth. In fact, net worth program, they don't require income, just like total net worth program in for Canadians and permanent residents. So down payment though is a minimum of 35%, and asset requirement is a minimum of 12-month PIPH. So property tax, interest, and principal, interest, and tax and heating required for equity offset program on top of the down payment. And net worth requirement is every dollar of a mortgage to equal to that amount. So if the client doesn't have a job but they have a net worth of, let's say, 400K on top of the down payment, yeah, it's under the net worth program, they're gonna get that. So myth is like, how people say, oh, if client have 35% down payment and have additional 12-month PITH, and they're working currently, are they gonna get mortgage that will, like, TDS is like 120? Not always. And nowadays it's really difficult for that to be qualified. You really need to have a strong file for that to work. Yeah, really, it has to make sense because, like, for instance, you really, like, for my clients who used to be an engineer in Korea, let's say they were working on an hourly rate right now as I don't know, somewhere, not earning the income that they were used to making back home, but then and they have 35% down payment and PITH. So what's gonna happen is, like, TDS is obviously gonna be out of, like, it's gonna be out to, I don't know, 70. TDS 70 is like common for me to see. And if, you can kind of tell your underwriter that, oh, he's in a training, he's actually going back, he's actually in school, getting that license, or, enhancing that skill set or something, that's, you still have to make sense, but it's gonna be considered. But if, we don't have any background from home country, nothing, he used to work as, he didn't even have a work history there, we can't really make a case here. Yeah. That's it.
Now, when it comes to these newcomer programs with lenders, is there any extra costs associated?
So that's also a lot of questions from my clients too. Like, is there any extra costs or premiums added to this? No, there's nothing. But there is no premium. But then I guess like it's funny because like TD actually requires a full appraisal on new to Canada program. So that could be an extra cost. I guess. I don't know. Yeah.
Yeah, true, true. Any particular lenders or programs that you kind of favor?
Scotia. TD is
Yeah.
very because it's new to Canada program is less than 5 years from the lending date, which makes it very difficult for a client to qualify from the beginning. Because like a lot of case, people come here and they start working, and then after 4 or 5 years, they decide to get a home. That's very typical for work permit holders too. They can't just like, right nowadays, like I see some people who tries to buy a home, just like as soon as they get here, but it's not usually the case. So they stay here, work for a bit, and then after 4 or 5 years, they want to, get a home, or they just become a PR status, they want to get a home. But then if it's lending, based on the lending date, they worked here 6 years ago. They don't qualify as new to Canada. So that was that was difficult for me to, work with TD from the get-go. Yeah.
Yeah, okay, interesting. If anyone else has any lender programs that they want to recommend too, like we're all here to share and learn together. So we would love to hear from you. Any ones that you've worked with in the past or any maybe limitations that you've run into. Okay, let's talk about documents. Now, obviously the documents might differ a little bit as a newcomer. So what does that typically look like?
Well, so typical income docs, property docs, yeah, they're just typical things. And then down payment, you need to most likely, if there's any overseas transfers, then you need to provide remittance receipts, bank statements from the country of origin. Usually TD doesn't require you to provide PR card. Scotia does. And I know monolines, most of them do want to see that copy. You just need to provide the PR information to TD Bank. And work permit copies, yes, and make sure that there's a valid of 183 days remaining at least, and a provincial nominee letter if they're a provincial nominee. And spousal, sometimes like TD lately they've been asking for permanent resident application letter. So what it is like, confirming that they actually apply for PR status. I don't know why. They've been asking. So what I usually do is just ask for all this document upfront so that I don't have to go back and ask for it later.
Right, yeah.
And yeah, credit bureau, international credit bureau is, if it's there, credit bureau is, in the country, then yes. And actually there's a list of credit bureaus. I think it's if you Google it, it's probably gonna show. And then if it's not there, it's like you have to provide something for credit. So like reference letter from our landlord, 12-month bill, that type of thing. So a lot of documents there. And something to make sure is check SIN number too. Sometimes
Yeah.
my clients, like work permit holders, like they would have a SIN number that's starting with 9. That's a temporary number. So once they turn into a PR status, they'll have 13579. I think it depends on the where the permanent residency was issued. So if sometimes if it's not updated, the lenders will ask them to update it first.
Okay. And when we say temporary sin, that's like until they get their PR status?
They, even if they're work permit holders, they still need to file the tax here. So they use the 9 number.
Okay. Okay. Lots of great questions coming in. How do you prove what field of origin they were in their country? Or sorry, what field of work they were in country of origin, or is it just kind of comment based?
I get the question.
So let's say they were a teacher in the country that they come from. How do you prove that?
So what I usually do is ask them to provide me a resume, and sometimes I ask for them to get me a diploma or a degree, and that usually works. Yeah.
Okay. Yeah, yeah, I suppose educational certificate and resume, that should suffice, yeah.
Things would work because when they're coming to Canada, for instance, for PR status people, they usually have a copy of that. They
Right.
need to do that, so they usually
Yeah.
have that.
Okay. Question to hear about medical professional programs. Any lenders that consider combination of new to Canada with the medical professional program?
Yeah, because Scotia actually has a. I was looking into that too because I recently had a case, a file, who's here practicing. They opened a clinic on their own, but then they're work permit holders. So is there a program for that? Yes. So Scotia actually has that program, and under the medical profession projected income program, I think there's actually, it highlights that foreign medical professions who was working in overseas, I mean other countries, and coming into Canada, they will consider that as as their,
Okay.
yeah.
So it sounds like you mostly work with Scotia.
Yes. You have HSBC, but then they're not. They're just gone. So
Yeah, they unfortunately left the market. We had a good suggestion here for Strive RMG. Our thank you, Kinchuk. Great lenders. If someone's buying a unit with self-contained basement, it can enhance eligibility amount using the rental income. Oh, that's good to know.
pretty much all their requirements, same thing applies for new to Canada.
Hmm.
Like this, owner occupied rental, everything stays the same.
Yeah.
Yeah.
More
Mhm.
questions coming in. Love the questions, guys. What about uninsured? Most of the lenders offer insured deals for new to Canada. Um,
Underline. Yeah. So financial institute in broker side, we have Scotia and TD, and that's the one I was just talking about.
yeah.
Yeah, there's Scotia, yeah,
Looks like
35% down.
yeah, Scotia can do max 65% LTV. For uninsured, any lenders that do 80% that you know of?
Um, but then that's only going to be considered as just a conventional. There's no exception on TDS. It's just gonna be this. It's going to be the same as treated as same as in when it comes to TDS exception. So Scotia for uninsured start right equity offset program, they can go up to TDS 150. Crazy, right? So if you go up to 20% down payment, LTV 80, there's no such a thing as that. So you're just gonna be limited to TDS 45. Yes, Scotia, yeah.
Okay.
Conventional new to Canada, like Scotia is definitely your go-to. Yes.
Okay. Sounds good. Yeah. How much time do you need to be in Canada before you can apply for a mortgage?
Think at least 3 months, right? Because of the income and the main requirement too, just to make sure. Because it's funny, Scotia actually looks at only 30 days for the down payment
Oh,
requirement. But most of the lenders, they will require 90 days of the down payment requirement. So, I mean, I say 3 months at least. It's just to make sure, right? I
yeah.
mean, some people they don't want to wait. Like for instance, they were relocated to Canada from the same country. Um, they don't necessarily have to wait because they don't have a probation or anything. They're just like full time, guaranteed. You know, they don't have to wait. But then there's a credit bureau thing too, right? I mean, they don't look at the credit bureau, but it's always better to, I always think like, oh, why don't you just wait for 3 months? Like it's just, it
Yeah.
makes things better. It makes things easier in a lot of ways. Yes.
Okay. Now, this leads into the next question. For down payment, can they use funds from outside of Canada?
Course. So there's so many like wrong information going around. So it's always better to have the funds wired as soon as they know they're gonna purchase, right? And make sure they don't move it around once it's in Canada. It's a nightmare to check them all, but I don't know what my clients are doing, but they just try to save $1 and move it around. And it makes me go crazy. But if it's a wire from overseas, remittance receipt would be required. So, but if it's gifted funds from a family member, that's the same thing, same rule applies. Once the gifted funds are in Canada, they have that in, the funds in their own, under their account. You just need to provide a signed gift letter, simple as that. And no, like TD and Scotia, they're not as picky as a monolines. Monolines, they will still require to see that remittance receipt. So it's better to have that. But for me, usually that's why I really love Scotia, because they don't really require for you to provide that if it's gifted funds. And one thing you guys have to really keep in mind is if you need to provide a gift letter and you just don't know what funds, like how much of amount that you need to input, make sure you use the deposited Canadian amount on the gift letter, not the one that's written in, let's say Korea, they sent like, I don't know, 500,000 won or whatever. Don't write that down. Make sure you write what's deposited in Canadian bank account. Yeah.
Good.
So I think that's important. What else is there?
What about sanctioned, high risk and sanctioned countries?
Well, so don't. You have to check the list. Make sure they're not listed as a sanctioned list country in Canada. There are gonna be so many questions you have to answer to. And there's a special high risk sanctioned country listed by TD as well. It's under TD Brokers Information Kit. So please check that first. And if it's like, before I go anything further, if it's own sources from the overseas, you have to provide the 90 days of history of the fund and 30 days for Scotia. That foreign statement must be translated via approved certified translator if it's not in English or French. So make sure the funds are in Canada minimum 30 days before the closing date. That's everybody's asking. Do we need the fund like 90 days, before the application date? No, you don't. I mean, it's better because it's safer. I mean, if it's 90 days there, like you don't have to provide anything like this. But let's say if clients want to have, because of the currency, sometimes people don't want to wire the funds earlier. They just want to watch the currency rate. And then just tell them to a minimum 30 days before the closing date, you have to have it. But you really, like, if it's gifted funds, 15 days prior to closing, I've done it many times. Yeah.
Okay.
It's like more restriction applies for monoline lenders because there's insured guidelines.
Okay. And I just put a link to the sanctioned countries list from the Canadian government in the chat if you guys want to take a peek at that.
Yeah, and like, funny enough, we don't have to talk about it anymore because HSBC is gone. HSBC had a limitation in funds from China. So if there was anything showing from China, within the 90 days, they couldn't use it.
Oh,
yeah,
interesting.
I don't think TD is doing that, or Scotia's doing that. Yeah.
Yeah.